Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome all of you here today on this January 5th. My gosh, what a Monday we've had so far, right? And a friend of mine sent me a text and goes, these bull markets these are tough. And I sent back a cupcake emoji. So it's a joke, of course. So so if you're a bear, it's been very difficult today. And hey, it hasn't been a trend to be a bear per se, in at least the indexes. So we'll talk about that. And that's why there's two sides of the market. Now, we'd like to welcome all of you here today. Thank you for the wishes, or at least the comments regarding my son did get engaged last week. They're getting married in Hawaii. So the plans are underway. And as you know, it's a little task, but it should be all wrapped up tomorrow. So yeah, so here we go. Family wedding in Hawaii. That's what it is. So we'll just move forward. So just real quick, we'd like to welcome all of you. We got Will with us, Tech One Trades, Tam Honey, Bill, and many others. Welcome. We also got Rachel Dashel in the chat. We welcome her. Now, this class, want to do this as a follow-up to callers. I had to put that on hold. I'll tell you why tomorrow. Today, we're going to really talk about kind of a follow-through to last week's lessons on bullish trades with initial protection. I want to talk about a trend line scan as well. And so we'll be talking about some of that with some of the things we're seeing in the market. So don't worry, we've got plenty to talk about. Now, just real quick as we get started here, you can follow Rachel and myself on X. Rachel will post her X handle in the chat. There's my handle at James Boyd CS. I want Rachel to post her link. That way you can just click on her link and follow her. Now, just real quick as we get started, remember the information here is provided for general informational purposes only. They're examples, not recommendations. When we bring up options, remember that options carry a high level of risk and are not suitable for all investors. Also, when we talk about examples, we will do those on the paper money software application. And also when we talk about investing involves risk, including loss of principal. Now, when we also kind of bring up our examples, I want to kind of just start with breaking down some of the things that we're seeing in the prices. So let's say you wake up at like 4 o'clock in the morning, like I did today, and you say, well, I'm waiting for the stock market to open, which would be 3.5 hours later. Well, typically what people are doing is they're probably just kind of taking a look at kind of what some of these prices are doing. And I just want to kind of take a quick look, and I want to kind of use your technical analysis goggles to tell me what you're seeing on these charts. So if we kind of look at this chart, if we're kind of just looking at the trend lines, okay, we're really seeing on gold kind of a pushback to about $143 to the upside, almost 3%. We kind of went down to an area of support. This is going to kind of come into some of our examples, kind of maybe, let's say, right around there. Kind of a little slight pullback so far. Middle of the candle, that large red one is about 44.50-ish. We get about 44.50-ish, could have tried to close the gap and actually fill in where it fell down from. So when we talk about, let's say, gold here, gold is actually trying to get that push back to the upside. Now, why does that matter? Well, remember, what sector is actually gold in? We know it's base materials. We'll show that in just a sec. Keep that thought. Now, if we look at, let's say, silver, just real quick, if we look at silver, you're going to kind of see a little plateau of support. Volatile last week. There's reasons for that. That one is actually trying to make a higher plateau, trying to get a little pushback to the upside. So far, getting back above where it actually bearish engulf from. If we can actually close here, that would be a close above the high of the low day. Now, probably the chart that I really want to bring up is really, and this is going to come into the examples, when you look at copper. Now, copper, you got to remember, it went up. It just was not going up in the same percentage. It didn't get talked about as much. But when you look at this big, massive drop we've actually had, and then you kind of look at some of the moves back to the upside, there's been really some regaining of that momentum and trend. Now, in this class, we really talk about uptrends. We talk about continuation patterns and so on, right? Well, I mean, if you talk about a continuation pattern, we're really talking about something where we had a horizontal resistance or diagonal resistance, and the price is trying to get above that. Now, we talk about cup and handles, okay, etc., ascending triangles, etc. And what you're now going to notice is, if I look at this on the 3-year weekly chart, we could almost kind of say this is like a V pattern, if you will. But probably one that's underestimated might be, let's say, copper. Now, why does this even matter? Well, because if you're getting copper that's actually going up, what does that tell us about the economy? If you're getting financials to go up, what does that tell us about the economy? The economy is probably stronger than we think there is. Now, you got to remember, we got 50 states. There's always going to be certain states, industry groups that are not as strong as others. That's the way it always is, okay? Now, when I come back to this, let's talk about just real quick the indexes real quick. You take a look at, let's say, the Dow Jones. Boy, what a way to wake up on Monday. I mean, this is tough, okay? Brand new high. Now, when we talk about Dow Jones, we're talking about what type of stocks? Small caps, mid caps, large caps. What are we talking about here? Large caps. What does this have to do with fundamental analysis? People want big income statements with big fat margins, and they want balance sheets in the billions, okay? And they also want kind of businesses that have scale to them, okay? Proven track records. And by the way, you know, some people like those, okay? And by the way, they also might pay dividends. Remember, dividends are not guaranteed. They can change them. They can cut them completely. They can increase them. It's not always constant is the point. So we got Dow Jones making a brand new high. S&P 500, not quite a brand new high. Now, you got to remember, if you look at the S&P 500, the top sector is what? It's technology. We'll come to that in just a sec. That sector of technology has not been as strong, and you're seeing that the NASDAQ has yet to break out. This is why it could be dangerous to be sitting in all tech stocks, because if you're sitting in all tech stocks and the tech area ain't moving, you kind of feel like you're left behind. That's why some people like to spread the capital over 3 to 5 different sectors, not 100% in one. Remember, common sense isn't common, okay? So just always remember that. People do some things that are interesting. We know that. Now, if we look at, let's say, the Russell, and this will get into our theme here today, talking about trend lines. So what's the word of the day? Answer, trend lines. Now, why? Well, because what you're seeing on many of these charts, and many of us, some of you like to look at horizontal areas of resistance, others like to look at diagonal lines of resistance. Now, when you come down and look at this, you're going to see a high, you're going to see where we come down to a lower high, and then if you look at something like this, we take it forward, this is where we're starting to break a trend line. So if we say break a trend line, in my mind, I'm kind of thinking like a diagonal line. Now, it's not just diagonal, okay? It's like Milwaukee, okay? Diagonal, okay? So that's going to be a theme that we talk about here. We want to kind of take a look at a quick scan. Now, if we take a look at this, a lot of stocks, if we're seeing on the small caps that are doing that, that probably tells us that there's a lot of stocks that are starting to break the trend line. Now, hold on. If we're starting to break the trend line, that actually also probably tells us we have what type of price pattern. The answer is pull flags. Because those really trend line breaks where the price should have stayed below resistance, it doesn't. The bears are losing control. The bulls are starting to push again and charge to the upside, at least trying to, okay? Now, let's go back to just real quick, the VIX, and we'll look at sectors real quick. You look at sectors, VIX, not a whole lot to say here. Did hit a fresh new low about last week or the week prior, late at 1338. Remember, not a lot of volatility. The reason why we talked about married puts last week is when the VIX is low, those puts are less expensive typically. We'll verify, okay? Now, sorry, I got choked up. Now, if we look at the sectors, okay? Financials, if you take a look at, say, the sectors, I don't know what type of candle you call this besides an Eiffel Tower, okay? Huge, okay? When you look at the energy with the extracurricular activities we had south of the border last weekend, that was a pretty big pop in the energy, which had lagged. Now remember, if we're pulling up the sector and we're seeing these type of moves, it probably wouldn't be that hard to find examples. When you look at, let's say, base materials, could you say the second word of the day is potentially continuation? And if you take a look at that if we go back and draw the horizontal line, that's a brand new high on a continuation. Other things that are actually pushing out to the upside. What do we got? Well, other things that we actually have that probably need to be talked about, which are going to come to the examples, is Dow Jones Transportation Average. Now, remember, if you got financials are hitting a brand new high, you got transport stocks actually hitting a brand new high. Is that a good sign, bad sign for a recession? It's probably doubtful that it's a recession, at least in the next month, probably. Okay, if the financials and the transports are hitting a brand new high. Other things we might mention when we say transports, we'll say industrials. Name the stock. Okay, name the stock. You only get one guess that might have poked to the upside if industrials got a little push. And the answer is Caterpillar. Okay, and we pull up Caterpillar. What do we got? Not to a brand new high, but you're going to see that big close on Friday and then a little gap here today. So Caterpillar tends to have some sensitivity or correlation to what the industrials do. Not exactly perfect, but you're going to see it's right there. Now, let's actually kind of get to work here. I'd roll up my sleeves, but I'm wearing a short sleeve shirt, so I can't. Now, last week we actually talked about a married put. And remember, that was really buying the shares of the stock. And what you're now going to see in this case, it's also buying the put. And the purpose of the put, again, was to really define the risk. Does it sound familiar? Exactly. Yeah, we talked about that. Okay. Now, in this case, what you're going to notice is we bought those shares at 125.55, and we set the current stock price is at 125.63. And we paid $1.26, which is the most we could lose on the put. And now if the stock goes up, the put tends to or should typically go down. Why? Well, because there's less chance of the stock being below the strike. So from last week to this week, if we would have known the future, which we did not, you're going to see that position is up $504. Now, the put, though, lost. So if we knew it was going to go up, we would have never bought the put, but we didn't know that. So we bought the put just in case for protection. So instead of being up $502, we're up $403. Now I'm going to tell you something. A lot of people say, yeah, but Jason, I just want all of it. Well, here's the problem. Why don't you just try to get some of it, okay? And it's kind of like a mentality here, okay? The $501 is if you knew the future. Do you know the future? No. Did I know the future? No. So what some investors realize, I don't know the future. I'm just being honest. And so let's say the stock actually goes up in our favor and it's up 402 of the 501 if we knew the future. My math is not great, but that looks like right around 80%. Would you be okay if you got 80% versus just trying to always think that you know the future? That's why people do defined risk trades. They don't know the future. They're saying, look, I'd rather have a certain percentage of something than actually just being sitting on the fence all the time saying, I don't know what's going to happen. Well, welcome to strategy, okay? Now, the biggest thing what I want to kind of talk about just real quick, before we do our trade, is I want to go over here to the right-hand side, click on the gear, and what I'm going to do is I'm going to type in gamma. Now, wait, what are we doing? Okay, what are we doing? Well, what I'm going to do right here is I want to add this, and I want to add delta for just a second. I want to add one layer of understanding, okay? Now, when you take a look at this, if you looked at this position, okay, now this right here, the column I want to look at is delta and gamma. And this is what's kind of interesting. So let's say when we actually got into the trade, this number was not -10, but it was, let's say, 40. And let's say that this number right here was 5 for gamma. Now, the delta is the first dollar move, okay? Gamma is the second dollar move. Remember we said last week that the delta does not remain constant, okay? It's changing, and the change per dollar is approximately 5. So what does this mean? Well, if the stock goes up, let's say $1, well, we actually get $100 on the stock, but we actually are down $40 on the put. Are you with me? Type in the chat if you're with me. So if the stock goes up $1, okay, the stock would be up $100, but the put, you probably lost $140-ish, and so you really have a net gain approximately of 60-ish. Are you with me in the chat? This is very important. When you get this, your mind just blows, and then you're like, wow, my lack of true comprehension has been hurting me. So I want to kind of stop that here, okay? Now let's say the stock goes up $2. Well, the stock goes up $2, we get another $100 on the stock, unrealized gain. But what does the delta become now? So on the first dollar move is the delta, okay? And the second dollar move, does the delta go up or down? Well, let's logically think this through. Well, the stock actually goes up. Does the put have a greater chance to expire in the money, meaning below, or does it have less chance to expire in the money? It should be less. So what you're now going to see is if the stock goes up the second dollar, the delta will change by approximately what the gamma is. And what you're now going to see is it's 35. Well, wait, $100 and 35, that would be about $65. Now let's take this forward here. If we go up $3, well, you get another $100 on the shares. And now it's now $30. Why? Well, because as the stock goes up higher and higher and higher and higher and higher above the strike price, well, there's less chance of actually the stock to close below the strike price, and you can only lose so much on the put. So now there's $70 overall gain. You go up $4. Well, another $100 on the shares, but now all of a sudden the put, the delta there is probably only 75. Excuse me, 25. Overall, the gain would be 75. Let's take $2 or $3 more dollars. You go up 100. Now you're losing 20. You're up 80. So what are you noticing now? As the stock goes up more and more in our favor, we're starting to get more and more of the gains. Can I get a hallelujah? Okay? So a lot of people think in their mind that if I have this put, it's hurting me, it's hurting me, it's hurting me. Well, we talked about break even last week, but the thing is, if we can get the direction right, and that stock goes up, it doesn't actually hurt more and more and more. The gains are becoming bigger and bigger and bigger because the delta on the put is not staying the same. Closer to how many ever shares you have, you're really making a bigger dollar amount, okay? Because the put isn't dragging on your position as much. Now, super quick to the downside. This is very important, okay? A lot of people, I labeled the last week's class of, are you nervous to invest? There was a lot of emotion that came from that topic, by the way, okay? So if we go down $1, we know we're down $100 in the shares. We get it. If this was, for example, the put was, let's say 30, we'd be down, let's say $70, okay? Stock actually goes down $2. Obviously, we're down another $100, but the put, the delta increases. It goes up to 35. So now we're down $65-ish. We're down now $3. Well, we're down another $100. But I want you to notice what's happening to the delta in the put. Well, the delta in the put is increasing. What does that do? It's giving more protection in the $1 incremental movement to the downside, where the loss is not typically as bad. Now, have you ever become more emotional as the stock was falling, where you said, man, it's becoming more and more and more painful? Well, the protected put, the more and more the stock actually goes down, the less it really matters, because you have a defined risk to sell the shares at the strike price. So now all of a sudden, if it actually goes down, down, down from $1, $2, $3, $4, $5, the losses are not becoming bigger and bigger per dollar movement of the stock. They should be becoming typically less. What this does not include is time and volatility, but if the stock actually goes down, volatility tends to go up, and that loss might not even be as that bad if the volatility goes up. So what's interesting is if the stock does go in our favor, it feels like we just have a stock position. If the stock actually goes to the downside, it feels like we have a protective put. Now, second thing I want to bring up. Once you, let's say, have a stock go up in your favor like this, can you set a stop on the put? That's a question. It's very important, by the way. Can you set a stop on the put? Now, we know if we bought the shares of the stock and we actually sold the call, that's a cover call. Can you set a stop on the stock? Well, the problem with that is if you did that, you have an obligation. Wait, is a put, when you buy the put, is that a right or an obligation? That's a right. And who has that right? Someone else or the investor who bought it? The investor does. So could we come in here and say, look, I want to try to get out at, let's say, 124. I want to try to lock in a little potential gain. Now, why did I use the word potential? Well, because what happens if we're saying, look, if it goes down to 124, try to sell the stock if it goes to that price or less. We cannot use language like, oh, yeah, I locked in the gain. You didn't lock in anything. You have an order to sell. That's it. We don't know what it's going to sell at until it does. We're going to say 124, confirm and send. So if you said, James, I'm getting very, very close to my target, can I have the target and set the stop at the same time while we have this protection in place? Yes. Okay. So I want to kind of bring this up because there was 150 comments on YouTube. I responded to every one of them. Okay. And the biggest sexy thing is here is if the stock goes up and up and up, can we set a stop even though we actually have that long put there? Yes. The long put is really just fire protection. If this thing did not lift to the upside, okay, it just has a contractual right to sell the shares from now to expiration. All right. Now, I just want to answer those questions. Speaking of this, I think we should practice another one, okay? Now, what I want to do is I want to go to just real quick. Let me bring up just really quick. So I think the best way to actually learn is you practice, okay? I'm going to go back to Dow Jones Transports for just a moment. Now, here's the transports, okay? Now, when we pull up the transports, if you said, James, I'm not really following you. Like, what type of stocks are in the transport space? Well, let me kind of jog your memory even more. If we went to scan in, and we said buy industry, and we said the industrial space, which is where the transports are, transportation structure, we get airport services, highway, and marine ports and services. Three major groups, okay, that we can see there. Ground transportation as well, and marine, like ships. Now, the one thing is probably when we think about transports, we tend to be thinking about airlines, okay? Now, that is actually really right there. Passenger airlines, air freight, and logistics. Does anybody know any stocks, you don't need to run a search, where you could think of some companies that might be trying to get a little lift? Well, I mean, you probably lived pretty close to a Delta hub. Let's go check Delta for just a quick second, okay? Now let's take a look at Delta. If we take a look at Delta, this is what we have right there. A little bounce, the keyword is so far. Now, so I'm just taking a quick peek. We saw this sector. We actually kind of start to piece together some things. What about Alaska Airlines? Is that as bullish as the other one? Doesn't look like it. What about a stock like Love? Okay, maybe a little bull flaggish. What about a stock if you live in Chicago and you actually are near there and you say, hey, is United Airlines kind of showing something a little bit bullish as well? Well, so United Airlines right around $115. Delta at the price point is 72. Why does that matter? Well, because if we pick a stock that's higher priced, the puts would tend to be higher. Okay, now I'm going to use, let's say in this case, Delta as an example. So how does the investor do this? Okay, now let's go check. Now, by the way, what do you notice right here that's happening? What do you notice right there that might influence the protection? Well, you got earnings coming up on the 13th, which is a week away. What does that tell us about the puts? Probably they're more expensive. Why? Because we have an event, an unknown event, and people might want to actually buy a put to protect the downside. Let's show this, okay? Now, what I'm going to do is I'm going to go to the paper money account. Let's go to the trade tab. We're going to type in DAL. Now, remember, there's only two steps here. Two. Now, what I'm going to do in this case is I'm going to go to click on the ask price. Not really that bad. If we click on the ask price right there, it's just going to say we're going to buy 100 shares of the stock. Now, remember, we said before you don't need 100 shares, but in our examples, you could. Our minimum, we said, was probably 40, okay? Probably prefer 60 or more shares. But on our example, let's say we bought 100 shares. Not completely, oh my gosh, can't believe it. $7,000 worth of stock. Now, if we bought 100 shares of stock, and then we said single order first triggers SEQ. Now, last week we said, hey, we're going to look at the monthly options, 20 to 50 days to expiration. Okay, fine. And we said we're going to go look at, let's say, something that has a delta of 30 to 40. Now, the only one, at least on the monthly option, is really right there, the $70 strike. Now, if we ran those numbers, can anybody tell me what that option yield is just real quick? Well, that option yield is about, if we paid about $285 and that stock price is $72.41, that actually tells us that how much are we paying for the put relative to the current stock price. The example here, 3.9%. Why is it so high? Volatility. And we see that right there, doink. We also see it in the earnings next week, okay? Now, I'm showing you this, okay? Because I've had multiple people tell me that the option price you pay doesn't matter. It matters to the break even, okay? It matters to the time decay. It also, for example, matters in terms of what strike you can actually pick, because you might want to try to stay below a certain price if you did. So it actually does matter when we really fully think about it. And also it is affecting what's the chances we could be above the break even at expiration. Now, I'm going to show you this as an example. Now, one thing I'm going to do is I'm going to come to this first Triggers SEQ. I'm going to click on that 70. Now, remember, if we said, what is the break even at expiration? Simple. You just have to add those two together. 72.49 plus 292. And so at the expiration, which is 46 days from now, the stock would need to be at 75.41. Anything above that, profitable. Anything below that, not profitable. Because we're actually saying, look, this is the stock price that we're paying now plus the the option premium. Okay? So if we're at 74.41 expiration, how much are we down? $100. If we're at 77.41 expiration, how much is it? How much are we up? $200. There it is. So what I'm going to do is going to go confirm and send. Now, in the optimal world, we'd probably say, look, if we were going to do this, we probably don't want to do this on the week before the earnings for the percentages that I showed. To learn from that, hence the point of the delta trade. Now, what I'm going to do in this case is notice there's not a commission to buy the shares. There's a commission to buy the option. Check, send the order. So if someone said, is this a bullish position? Of course it is. We're buying the shares of the stock. Why would you buy the shares of the stock? You think it's going to go up? The purpose of the 70 is actually to have a defined risk. The risk is really from 72.43 down to 70, and that's going to be $2.42. That's the stock loss. Stock loss, okay? But you got to add, what did you pay for the put? The answer, 288. And so if you add those two together and say, look, let's say the stock went down to zero, how bad would it be? Okay, the stock goes down to zero. The answer is it loses, in this case, if the stock went to zero, $530. Okay? Now, so I just want to show that because last week I showed a lower volatility example. I think sometimes comparing and contrasting could be helpful. Now, let's go back to something just real quick to the financials. So when we actually think about the financials just for a second, the IXM, that sector right there, what are some stocks that might be lower priced to practice this strategy? Did you think of any? Well, the answer is not going to be Goldman Sachs at $1,000, nearly a share. The answer is, could we do Visa, MasterCard? Yeah, maybe. Okay. Visa, MasterCard there. Could you do American Express? Yeah, maybe. Not as bullish as the banks themselves, even though they do banking too. But if we take a look at, let's say, some of these others like COF, probably the most bullish card I saw was Capital One Financial. But if we actually said, are there companies like BAC that are lower price where we can also practice something like this going into earnings? Well, let's take a look. $57. Has an upward trend. Earnings actually on the 14th, 8 days away. Now remember, it's going to influence the put. So let's go to the trade tab for just a sec. Let's practice one where we're going in earnings. Why do I bring this up? Because sometimes people can be really quite nervous around the earnings. So the first thing we notice immediately, the volatility is not 44. The volatility is 26. What does that tell us? The puts are probably going to be less expensive. What does that tell us? The break even's probably going to be lower. Okay? What does that tell us? The option premium we pay relative to the stock price is going to be lower. Okay? Now, let's pull this up. Let's run the numbers. Practice again. Click on the ask price. There it is. Let's say the investor says, I want to buy the shares of the stock. And then number two, I want to buy the downside protection. Now, if they do that and they just change this to first triggers execute, this is just saying, look, they're buying the shares of the stock. And what they're doing is they're buying the put as well. Okay? Now, if we said which strike has a delta between 30 to 40, the only one that we can see on the monthly option with 20 to 50 days expiration is the 55. That really has, if we got somewhere in the middle, that'd be $1.04 divided by 57.13. So if we looked at this and said, well, what's the percentage? Run the percentage. Now, I had a gentleman who said to me one time, James, I heard you say the exact same thing for a year, and I never did what you said by running the numbers. Then after a year, I actually stopped listening. I actually started practicing what you're talking about in the paper money account. And it was like, why didn't I practice this before? Do not try to be Mr. Tough Guy. There's a reason why I'm saying this, okay? Person said to me, I felt like I wasted a year, and they did, okay? That was back in 2017 when the market went straight to the upside, okay? So it's 1.8%. Break even on this? Well, 57.12, okay? Plus 104, add them together, and you get 58.16. Now, do you think there's a pretty good chance you could get to 58.16 if we're at 57.11? Pretty good chance. So how much do we need the stock to go up by? Answer, we need the stock to go up by the premium to get to the break even. How many investors have been sitting on the sidelines for years, sitting in cash, worried about this, worried about that, worried about this, worried about that, and they could have traded the same stock trade, just accompanying that stock trade with, let's say, some protection. This allows that if the stock does go up in the intended direction, they're getting more per $1 move to the upside because the delta on the put has a lessening effect. If the stock actually does go to the downside, the put has more of a protection effect because the delta is increasing. Thus, there's a greater chance of it to be in the money, okay? Now, the other thing is when we go back to this, I'm going to add to this here, and we'll run the scan. I'm going to change it to about 104. Just because we put this here doesn't mean it's going to get filled. We need to verify that it gets filled. We know the commission is actually right on the long put itself. We see that there. Check, check. Let's go ahead and send the order. All right. So I just wanted to kind of follow through on this, okay? So I just want to follow through on that. Now, I want to kind of talk about just real quick something that we actually see. Now, some of us, we like stocks that kind of run to the upside a little bit and then maybe kind of fall back down. And in that falling back down, it creates, remember, what was the word of the day? What was the word of the day we talked about? The word of the day was trend line, okay? Trend line. Now that trend line, we're talking about a diagonal trend line. That diagonal trend line is made from lower highs, lower highs, lower highs. Now, I don't know if you've ever had the thought where you said, man, I would love a scan that would actually help me see stocks that were breaking the trend line. Well, that's what we want to do right now, okay? Now, who's drawing the trend line? Well, the TOS platform is drawing the trend line. Let's show this just real quick. Now, I'm going to share this with you. So what I'm going to do is I'm going to go right to the platform just for a second. I'm going to go Market Watch, and let me share this with you, okay? So, and I want to explain this, kind of some of the functionality. Now, by the way, there is a survey in the chat. There's only 2 questions. okay? And click on that right now so it's going to pop up in a browser and you can hold that for just a sec. And thank you ahead of time for filling that out. I do read all those comments. Thank you in advance. Now, what this is now going to show is that script that I sent to you, which, by the way, if you're watching this on recording, welcome. We're going to go to the very top right, and I'll put it in the description of this video. We're going to go to Setup. We're going to go to Open Shared Item. Now, if we actually click on this, what you're now going to, so go Set Up Open Shared Item. I'm going to copy and paste what I sent to you in the chat if you're watching live. If you're watching this on recording, it's in the description of the video, okay? So at the very top right, we went to Set Up, Open Shared Item. Copy and paste it right there, go Preview. And what I'm gonna do is I'm gonna label this as Trendline Breakout Scan, and I'm just gonna label this the date, 1/5/26. Let's import this, okay? Now, when we pull this up, what you're now gonna see is if I click on this, when I go to a personal list, anything that, for example, has kind of this, like, it looks like a archery, if you will, that's a scan, okay? So if I click on that Trendline Break Scan, it's gonna run the scan in a certain list. How do I know what list I'm looking at? Can I alter that? The answer is yes. So first off, where can we see, once we load that, where can we actually see the scan itself? Well, if I go to Edit Trendline Break Scan, now notice I'm over here on the right-hand side, click on the three lines, and now when I say Edit Trendline Break Scan, click, and if I do that, now what you're gonna see is, what do we have? Now, I'm not sure if you're like this. I love simplicity, okay? So what you're now going to notice is, first thing it says is scan in what? The S&P 100. Do you have to? Could you scan in, let's say, your personal list that you want? Could you scan in a group of stocks as well? You could. Could you scan in, let's say, the S&P 500 itself? Yeah. Could you actually scan in, let's say, the public, just the Dow Jones itself? Yeah. Okay. Now, by the way, if I did this, if I did that, it's going to say, do you want to rewrite the scan? We'll say save. You want to rewrite it, and you just click on OK. And all it's going to do is just run the scan in the Dow Jones itself. Okay, that's all it's going to do. Now, I'm not going to do that. I'm going to go back to this. Let's say go back, click on the three lines. And if we do this, edit trend line, you're going to see that it's going to say, look, it's using an auto trend line. Who's drawing the trend line? The platform is. Okay, now that trend line, you're going to see that there's different lengths of time, and I'm going to show you a couple stocks. Now, what it actually does is it says, look, show us about 50 stocks, okay? Now, that might be too much for you. You might say, look, I'll just take 20. I'll take 10, okay? But I'm going to have 50. Why? If I can. Doesn't mean it's going to give us 50. Now, when we get a list back, which ones do you think we're going to look at? Do you think we're going to look at the ones that are, for example, at the bottom where the relative strength has been weaker down here? You think we're going to look at the ones maybe up top a little bit? Probably not. We're probably going to look at the midsection of this, probably about right here. Now, why do you say that? Well, you got to remember something. When you look at that trend on the daily column, remember, if someone's talking about bullish, 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 higher high, higher low, higher high, higher low, higher high, higher low, that's probably what they're looking for if they want bullish. If they said, look, I don't want just something that's bullish, I want something that's bullish, but relative to, RS for relative strength, relative to the S&P 500. Now, these are historical data points, 5, 10, 21, 42, 63, etc. This is what it's been in the last 5 days, 10 days, 21 days, etc. That doesn't mean it's going to be in the future, but it's shown a history of actually being strong. We're asking the question, could that trend continue? Now, if we actually have something where it's breaking a trend line, which, by the way, breaking a trend line is a higher high, doink. Well, that's why we're seeing a number of stocks right here that are actually hitting brand new highs. Okay? Now wait, if you're hitting brand new highs, could those be Caholds as well? Yeah. Wait, if they're breaking the trend line, if they're Caholds as well, could they be brand fresh? Smell that? Fresh. Okay? Could it be brand new moving averages that have gone just green in the last 1, 2, 3 days and so on? 4 days, brand new. And could it also be ones that are triggering the Cahold? Yeah, okay, yeah. Now, let's take a quick look at this for just a sec. So when we say trend line, now I'm just going to pick a couple stocks out of there, okay? So I'm going to pick GE. I'm going to pick Met for just a sec. I'll pick MS. I'll pick I'm just going to pick a number of them. DHR, EMR, ConocoPhillips. Just kind of sample test a couple of these stocks that actually are coming back. Okay, now, when we say draw the trend line, okay, so if I pick one of the first stocks that I just pulled out of the list, the trend line. Now, where's the trend line? Well, I said that when you look at this list, you're probably going to get more diagonal trend lines. Not always. In this case, you'd probably say, look, the trend line that I'm seeing is a little bit more horizontal if we're talking about the last couple of weeks. But if we're talking about in like the last couple of days, is there a diagonal line there? And I think we could say, yeah. Okay, the answer is both. Okay. Now, if I pulled up, let's say, a stock like EMR and said, hey, I'm looking for some stocks where maybe there's a little bit more of a diagonal downward tilt to it, is that a stock that's kind of broken that slant? Yes. Why does someone care about the trend line itself? Because that's probably where they're going to set their stop underneath, perhaps. Okay? Now, why does it matter about the trend line? Well, if you break the trend line, you're not making right now equal lows. You're not making lower lows. You're making higher highs. If you make higher highs, you could be making then higher lows. Higher highs, higher lows. That's called an uptrend. Now, if I look at another one in that list and say, well, what about Met? This is kind of more classic what you're probably going to find from that search or scan. Well, this is kind of your classic where we yanked back a little bit. Now, there's some people that really enjoy buying on the dip, okay? Where the sellers have knocked the price down a little bit, and it might be closer to an area of support. Now, they like that because they might be getting something a little bit more price attractive. Maybe the fundamentals might be a little bit more attractive. And again, it goes back to these are probably things that you're looking at, a scan that you're looking at in the morning or midday, because you're saying, look, if they're getting above, other traders are recognizing higher highs. And the higher up it goes, it starts to trigger the 20-day high, the 55-day high perhaps, the breakout script, the whole moving average 10, and the trade above the high low day or close above the high low day. You get multiple bullish alerts going off the higher it goes. Now, if you looked at a stock like MS for just a sec, okay, is this more diagonal or more horizontal? Well, if we're talking about in the very short-term sense, we'd probably say in this case, well, last week diagonal. If we're saying something, let's say, more horizontal, probably saying we could say both. This one looks very much like DHR, okay? Now, if I brought up just one last one, COP, and said, what do we see here? Well, this is a little bit more the recent diagonal as well. And this is what we really mean by this, right? You break the diagonal, and it doesn't always work like this. Sometimes it can happen. You break the diagonal, and what you're sometimes going to see is you get a red candle. Repeat, the second day of the breakout tends to be the red candle day. Tends to be. That does not mean that it's bearish. It just means it's trying to make a higher low. Very next day, doink, back to the upside, makes a higher high after only one day down, and then here we are. But that's kind of really why the investor is trying to focus on trend line breaks. Now, so I want to kind of share that with you. I hadn't shared that in a while, and I want to kind of share that because there were some questions regarding looking for stocks that are breaking trend lines that really could be trend twos or threes. So your comments, which I read, the stuff we actually discussed here today was an answer to the questions that you asked. Now, I'm out of my time here today. We have Cameron May coming up next. Your homework assignment, if you said, James, could you send that out one more time? I don't have that, okay? Now, we're not talking about putting this in your stocking stuffer, but if you have your stocking out, stuff that one in your stocking stuffer and start running those scans as well. Now, I'm out of my time here today. We also did 2 sample trades with this as well. Stay tuned for Cameron May coming up next. Thank you, Rachel Dashel, for answering those questions in the chat. And thank you ahead of time for filling out that survey. So now remember, with what we discussed, it was done for example, illustrated purposes only. We kind of followed through on the concept of actually looking at those Mary puts if the stock went up or down. Kind of very interesting on those 2 points we talked about. And we also brought up the point of how do you actually find these trend line breaks? And we actually talked about the scan you could use there. Thank you so much. I'll be back on tomorrow morning at 11 a.m. And stay tuned for Rachel's class coming up this afternoon. Take care. Bye-bye.